Most of the indices are trading positive, but the Japanese markets are in the red.
The time has come for policy to adjust. The direction of travel is clear.
Promising, pretty much promising, and leaving absolutely no room for doubt that rate cuts are coming.
Metals as well as tech. Both those two indices are going to be in focus in today's trading session.
This drug has been very important for Zydus.
24,900 on the Nifty, so it's slightly higher, 70 point.
Financialization of the Indian equity markets is growing at a pace that none of us have seen before.
Adjustments, remember, will take place on September 27th, 2024.
45% higher on Interarch. That's the new listing.
Great Monday morning. The Nifty reclaimed 25,000 as we speak.
It has demonstrated an outstanding ability to adapt.
There and thereabouts for the Nifty, almost nearing a record high. It's the start of an expiry week.
Sharpest strategies, top market trends, unmatched perspectives, the trading day's most comprehensive roundup. Stay ahead with NSE Closing Bell, broadcasting live from the CNBC-TV18 Motilal Oswal studios in Mumbai.
Well, that's the day so far, and indeed 25,000 is here on the Nifty, and we are practically 50 points away from hitting the all-time high levels. This is Closing Bell. We're here to take you through the last 1 hour. I'm Surabhi Upadhyay, as always with me. Nigel D'Souza. Nigel, good Monday.
Well, it's a good start to the week, Surabhi. You know, if you said that in the getting to the final hour of trade, if you're going to be 200 points higher, well, you'll be very, very pleased with that. So the Nifty is up 200 points. As we mentioned earlier today, the two sectors that are firing are tech as well as metals. And I think if we need to have that flourish in the final 60 minutes or so, the Nifty bank's going to be in focus. 51,300 is the mark where there is some kind of resistance. If it can get past that mark, you know, maybe in fact we end the day with a bit of a flourish. But we've got close to 50 points to the fresh all-time highs in the Nifty. Let's see whether or not the bulls have a bit of a surprise for us in the final 60 minutes.
No, absolutely. IT has been absolutely phenomenal. And I think that's something that was along expected lines because of the strong finish that we had on Wall Street, NASDAQ doing what it did with all the expectations of the rate cut after the Jackson Hole speech. So a lot of the large cap tech is still retaining that gain. There's no sort of profit taking. That's what the IT index is also telling you. So your LTI, Mindtree, HCL Tech, all of them. Metals is another strong pocket of the market, like Nigel pointed out. Hintalco, for instance, 4%. That's the kind of gain that stock is pushing. And you have on the steel side as well, something like a Tata Steel and many others. But the good news for the market is that the trio of the heavy hitters, the big batsmen, they're firing. So Reliance Industries, HDFC Bank and L&T, some examples of where the top boys, the big boys, they're right now on the upside of the screen, 1% higher. So if any of them decide to move, and if the banks, you know, the others beyond HDFC Bank also come and join the party, then we know what that means for the bulls. So overall, it's been looking good. The mid-cap index as well, about 0.5%. But today is more of a day of large caps. Yeah. At an index level, actually, there is some underperformance in the broader market.
Well, that's right. You know, and Surabhi, this post Ola Electric's listing, this EV theme seems to be catching on yet again. Ola Electric, I recall, was down close to 4%. You know, the last I checked, the stock, in fact, had moved into the green. So pull up the intraday chart out there. That's moving quite well. Another stock like Greaves Cotton, you know, it has a small element of two-wheelers out there, 2- and 3-wheelers of EV. Well, that stock as well is moving high. In the last few sessions as well as moved up, and it's perked up in the last few minutes. And Precision Camshaft, they do retrofitting. That is, they take your old vehicle and they make it into an EV. And if you look at it during the last 1 week or so, that stock as well has moved well. So anything with regard to EV, you know, has suddenly started moving post this Ola Electric. So it seems this EV theme is back. You know, Greaves Cotton, Precision Camshaft, they were rank underperformers. They seem to be coming back. And Ola Electric itself up 5% from the low point of the day. But let's get to the call for the final 60 minutes.
No, absolutely. We'll talk about a lot of these big movers and shakers in the broader market as we go along. But how do you look at the last 1 hour? What are the trades to consider? We have Ashish Katyal joining in. Ashish, good to have you. Good afternoon. So it's turned out to be quite a green Monday afternoon for the bulls. What's your call on the index, if you would open out any trades now, and of course individual stocks?
Good afternoon to you and all the viewers as well. Like we were discussing even on Friday, I was expecting Nifty to cross that 25,000 psychological mark, and we are there. And despite of the global events that are happening around, we are managing to sustain that today. That clearly shows a sign of strength. Also, there were a lot of build-up on the short call side at 25,000. I'm sure they might be running for cover now. If Nifty breaks above that 25,050, my target remains at 25,360 mark. So yes, long positions can be created even here. On the downside, one can maintain a stop loss of 24,900, and we can head towards 25,360 levels on the upside, which is a GAN level. So the overall tone is bullish for me. And also what is interesting is that Bank Nifty has started participating now. Bank Nifty showed some consolidation. It has not yet moved higher substantially, not yet filled the gap that was created about a few weeks back. So there is a lot of potential if Bank Nifty starts performing and catching up. I'm sure Nifty is going to be on fire. So Bank Nifty is the index which can now move on the upside. And if 51,300 is broken on Bank Nifty on the closing basis, I think Bank Nifty is going to be crossing even that 52,000 mark and maybe inching towards the lifetime high. That's an optimistic scenario. So overall undertone remains bullish. We can see a lot of buzz around the mid-cap space as well. So I'm expecting any kind of a dip should be used as a buying opportunity.
Okay, you're sounding optimistic on both the headline indices, Ashish. What about individual stocks? What's on your radar?
On the radar, it's Mahindra Life Space. We can clearly see a very strong move in today's session. Some kind of a profit booking from the highs, of course, but I think the space should buzz and we should start seeing an upward tick in this stock. And Mahindra Life can be a good buy, and we can expect a target of around 650 on the upside. On the downside, one can maintain a stop loss of around 570 levels. The next stock on the buy side is going to be from the large cap is HCL Tech. We can see it's the top gainer. Now, very strong breakout happening. IT is definitely buzzing. If you look at the ratio analysis of IT sector compared to Nifty, that ratio has turned sharply on the upside, suggesting that the outperformance will come from the IT sector as well. So HCL Tech is leading all the way on the upside. I think this stock can head towards the level of around 1800 on the upside, as long as on the downside 1670 remains intact.
Okay, all right, got that. By the way, in the broader market, just to name a few names, the kind of surge, as I said, at the index level, you would imagine that it's a weak day for the broader market just because the mid-cap index is underperforming the Nifty. But look at individual high flyers. I mean, NIIT hasn't stopped ever since it became, public that, Mr. Damani is having some interest in the company. He's bought equity worth just a little over 0.5%. That stock come and rocket. It's just a circuit over there. Motilal Oswal, there's that index inclusion, FTSE, FTSE index, all world index. That's working very well for the stock. Godfrey Phillips, 7% higher. GSPL, 11% higher. So many names out there, really. Honasa has had a brilliant day today, 10 to 11% on that one. Quick Heal. You can just go on. And also RPSG Ventures. Nigel was pointing out the stock in the morning itself. Look at that, 20% circuit. Most of the RP Sanjeev Goenka group stocks have done really well over the last few weeks. And today, Ventures has been just flying away. Well, can't fly too much because there's a circuit now. But Nigel, let's not take our eye off on the metal screen as well, because all kinds of stocks, PSU, non-PSU, ferrous, non-ferrous, everything is surging. Picking up anything specific or just trading momentum?
Surbhi, on the day that we had the Supreme Court verdict, I recall I made this point that the metal stocks have got knocked, but they haven't got knocked out, because that retrospective penalty, the breathing space was given that they can pay it within the next 12 years or so. So it wasn't a one-time hit. And from there, all those stocks are much higher in comparison to the lows that we saw on the day of the Supreme Court verdict. Now, in today's session, the metal stocks are at the day's high and the index as well. So I've put down 4 broad reasons. The first up is the commentary that came in from the Fed chair, Jerome Powell. He said that the time has come for rate adjustments. The street liked that very much because the dollar index is softer. And also there is optimism that we're going to see rate cuts. That's normally positive for metals, and that's why that's the global factor at play. Point number 2, China is always of prime importance, right? What's going on there? Now, there was some commentary that came in over the weekend, and that was that China has halted any kind of approvals for new steel capacity. That is good, because as of now, supply is way more than demand. So there's not going to be more approvals, then that will be good news as well. So that's why, in fact, that's good for the ferrous space. Also, we have seen a sharp correction, both in steel as well as in iron ore prices. But in the last week or so, you've seen a bit of a bounce on HRC, billet, rebar, even on iron ore. Those prices are up close to around 3%. So the China factor is positive in the right direction. The third factor, base metal prices have bounced. A softer dollar is normally good for base metal. And that's why you've seen, whether aluminium, zinc, copper, all of them have moved up. There is some supply curtailment as well that we have seen. In fact, Chinese zinc smelters, they are contemplating shutting down some of their production to stem the losses, which is very, very good for Hindustan Zinc and in turn good for Vedanta as well. Aluminium prices, by the way, in the last month or so, they're up close to 15% from the lows that we saw at the end of July. So that's been a good bounce that we've seen out there. And point number 4 is the domestic factor. JSW Steel has announced that they've gone ahead and they've increased rebar prices by 750 rupees per ton. This is good news because we're still in monsoon season. Normally you expect this in the second half of September. So there is some confidence that's coming back there, and that will be positive when rebar prices move up. It's positive for long product prices as well. So that was a pleasant surprise. And Jindal Stainless, they went ahead and they've increased a part of their mix, or series mix out there of around 304, 316 series. That's the term that's given out there, by 3,000 rupees per ton. Input costs have gone up. Nickel prices have gone up, so that's why they've increased prices. So put these 4 factors together, the metal index is at the high point of the day, and a lot of those stocks are flying away as we speak. Well, let's get in our guest on the show then. Sudeep Bandyopadhyay joins us. Hi Sudeep, good afternoon. What's your view on this space? I mean, what's the pick of the pack? As we speak, we have Nalco that's moved to the high point of the day. You have some of these aluminium players. Vedanta has moved higher. Nalco, Hindalco, all of them. What do you like?
Well, good afternoon, Nigel. I think, you summed it up pretty well. With US interest rates expected to come down, China, things are getting better in terms of metal demand and domestic demand being strong. I think metals may be in for a good time for a while. Under these circumstances, I think most of the metal companies we are talking about are going to enjoy a bout of success for at least the foreseeable, maybe a couple of months at least, unless things change drastically in any of these fronts, which is unlikely to happen. As far as the specific stock is concerned, I've been positing on Vedanta for some time and have spoken about it multiple times. But Vedanta now again, with the zinc production being curtailed in China, Hindustan Zinc, I think getting into a positive territory, and with all the metals getting into a situation where the prices are going up, Vedanta definitely benefits. Of course, on top of all this is what Vedanta has been doing as far as repairing their balance sheet and the balance sheet of the parent company. That does add significantly to the positivity around the stock. So the OFS they did and the money they collected will probably come back to the shareholders as dividend at some point in time. Also, the demerger process is an advanced stage. So at some stage, some of the companies will be, maybe sold in part or full. So that will again lead to value unlocking in a big way. So I think Vedanta is a good buy, even at current levels, from an investor's point of view.
Okay, all right, got it. So that's sort of 360-degree perspective on metals and what could be powering this kind of a rally today. Sudeep, hi, good afternoon. Thank you so much for joining in. There's so many individual stocks that are also catching the limelight, right? So I want to start first with the NIIT and what you made of this buzz around the investment that Mr. Damani made in the company, right? It's got the market so excited that the stock is up on 20% circuit now. What do you make of it if you've seen the company off late? Any views, any thoughts here?
Well, I think, I would say that overall technology space is getting hot. And we have seen that today happening with US recovery and US interest rates coming down. Very clearly, there is the fear of recession around, US is not there. And that augurs well for Indian IT companies. Now, as far as NIIT specifically is concerned, of course, the acquisition of stake by one of the leading investors definitely calls for attention. And apart from that, we have to remember that NIIT has stake by some other prominent mutual funds as well. So overall, I think there are a lot of smart managers who are banking and betting on NIIT. So under the circumstances, I'm not surprised that this stock is showing some excitement. So fundamentally, there is nothing wrong. Yes, today it has really moved up 20%. So maybe it's not the right time to buy today. Let it cool down a bit. Let things stabilize a bit, then one can look at it again.
Okay, got that. Just stay on. Let's actually bring in Rima as well to understand what that block was all about and how much equity has Mr. Ramesh Damani actually picked up. Rima, fill us in on the details.
Thanks so much for that. Big mover today. NIIT Limited, as you pointed out, Ramesh Dhamani, marquee investor, has bought 8 lakh shares last week at a price of 127. That's about 0.6% of the equity. But he's not the only large investor in the company. You also have Nippon Small Cap Fund with an 8% holding. Marathon Edge has holding. MIT has close to about a 5% holding. Now, just to give a sense about the fundamentals of this company. Now, in July, the company has guided that in Q2, they will see a top-line growth similar to Q1, which is 10% on a quarter-on-quarter basis. But the company is making investments, and therefore margins in Q2 could be negative. They're talking about single-digit margins at this point, though they will turn positive in Q3 and Q4, and therefore for the full year, the company is guiding for a top-line growth of 380 to 400 crore rupees with low single-digit margins.
All right, understood. Got that, Rima. Thanks so much. But before you go, Rima, tell us a bit more about the buzz on IT. The sector seeing so much buying, despite the fact that fundamentally, I mean, again, this quarter did not throw up any major positive surprises. But I know you've been looking at some brokerage notes as well. So what's the latest?
Thanks so much for that. So IT has been the leader in today's rally on hopes that the Fed rate cuts begin as early as September. And we know, history tells us that whenever there is a rate cutting cycle, technology stocks, whether in the US or in India, tend to do well. But there is an interesting note from Jefferies where they talk about Indian IT having outperformed the Nifty since calendar year 2023. So after a sharp underperformance in 2022, the Nifty IT outperformed the Nifty by 4% last year. And even this year, it's outperforming. But this outperformance has come despite there being earnings downgrades. Except for TCS, large cap and mid cap IT companies have seen earnings downgrade. So therefore, Jefferies is arguing that this up move seen, this outperformance seen in Nifty IT is led by PE re-rating. So the 16% year-to-date up move in Nifty IT is driven by an 11% PE re-rating. And now, Indian IT stocks are trading at a premium to their historical averages, while Accenture is trading at a discount to Indian IT names. So divergent trends seen between Indian IT and Accenture. According to Jefferies, valuations are rich. The Nifty IT is at 29 times. It's trading at a significant premium to Nifty IT at 40% more than what we historically see. And therefore, they say it's time to be selective on this sector. They like Infi and TCS, given the limited risk to their earnings and relative valuation comfort. So yes, IT is doing well, but as Jefferies argues that this outperformance seen by IT has been driven by a PE re-rating and not by earnings upgrades.
All right, Rima, thanks very much for that. So, Deep, there you go. I guess macro tailwinds, sentiment, something or the other seems to always work well for the IT sector, even though the numbers aren't still showing up. The growth, we're still talking about anemic growth. What would your stance be? Would you look at adding to any positions on IT now? Any stocks?
Well, I think I completely agree with this, report which was mentioned by Rima. One thing is very clear. Whenever there is a interest rate reduction cycle, IT does well. The second factor, which is here most important and one needs to notice, is that there was a fear that US is getting into a recession. The new projects will not come, existing projects will be held back, and things like that. Now, that definitely is not there. With US economy continuing to grow and grow much better than most other developed countries, leave aside India and few of the outliers. So under the circumstances, I think IT companies' order book will continue to grow and there will be no project stoppages or project cancellations. So this does augur well. Now coming to the valuation, yes, Indian IT companies, particularly I find the mid-cap segment quite kind of richly valued. So under the circumstances, if somebody has to look at IT, I've been recommending that, TCS, Infosys, the leading companies, I think there the valuation comfort is still there. And there is very little which can go wrong in terms of earnings in these companies. So it's better to stay in these companies under the circumstances.
Okay. All right. So that's a view on IT. Let's take a look at some more stocks that are managing to move around. One of them, as we mentioned, is Motilal Oswal. The other is DCW, the whole story around the anti-dumping duty on CPVC. That seems to be working well for this one manufacturer of the CPVC resin. That stock's been up and about. We spoke to some of the pipe manufacturers. Some of them, like Finolex, said that it's a pass-through, so won't really have much of an impact on either volumes or pricing. Epigral is the other one that is into the CPVC chain. That stock, however, has cooled off from the morning. Any thoughts on this entire complex, PVC pipe makers or CPVC pipe makers, Sudeep, and what you made of this anti-dumping duty? Basically, it's an extension. It was set to expire, I think, in the next couple of days, but now it's been extended.
So it's pretty much a continuation of the existing regime, Surbi, and I don't think anything changes drastically. Yes, there was an apprehension that if this goes out, there will be challenges as far as these manufacturers are concerned. So that's been taken care of, and rightly so. So I don't think we need to look at especially into this segment because of this anti-dumping duty continuation. As far as these pipe companies are concerned, some of these do look good from a long-term point of view, considering the emphasis on infrastructure, construction, and what's happening in the economy.
Okay, all right. As we speak, we are seeing a bit of a spike up both on MCX Gold that our ticker team is alerting, as well as Brent. Both of them have moved to the high point of the day. Both have moved up post that news that flashed for you on the screen on Russian military aggression. So that's why we're seeing a bit of a pop up there, because the energy part is where they have attacked. So that in all probability could create some bit of a shortage. At least that's the way the market is viewing it. And the flight to safety because of this, this war cry again coming to the fore. So I think that's the reason why both those two commodities have moved up. Well, Sudeep, wanted to ask you about the EV play. We'll play bites later coming in from Mr. Rajiv Bajaj as well on how does he see things shape up. But what's your view out there? There's Ola, there's Hero MotoCorp that has a stake as well, in one of those EV players. Bajaj Auto is there, and there's bits and pieces players like Greaves Cotton. What do you like from the space?
Well, very honestly, I am yet to make up my mind whether this sector is really worth at the kind of valuation where Ola Electric is trading. I think it's a very, very small niche segment of the market as of date. Yes, we all agree that there is significant potential, but globally, Nigel, the EV part in two-wheelers hasn't picked up. Now, having said that, I must say that as far as India is concerned, two-wheelers is a very large segment, and two-wheelers and three-wheelers both. And maybe India is the market where this trend may change. But it's too early to comment on a winner as far as this segment is concerned. Ola has made the right start, right noises. The battery plant is coming up, which should improve their margin, provided international battery prices don't crash and it doesn't become a millstone around its neck. So we have a whole lot of things to see. The volumes are too low at this stage to really move the needle for a large manufacturer like a Bajaj or a Hero MotoCorp. So I don't think we need to take a very strong position or a very firm view on this. We have to let it play out for some time before we take a call. If somebody needs to participate, I think Bajaj or Hero MotoCorp will be a better bet because they are established players and they have the IC business going and chugging very well.
All right. Okay. Got it. Thank you so much for that, Sudeep. Good to have you on and to get all that perspective from you. You have a good rest of the day. By the way, the geopolitical updates coming out of the Middle East that Nigel was just talking about, let's put up Brent oil prices as well, because when we started the day in the morning, Brent was close to 79. Now it's inching closer and closer to $80 a barrel. So there's been a move of about, $1, near about $1 on oil as some of these updates keep coming through. So yeah, eye out on the commodity complex for sure. We'll take that break, come back on the other side, and there's lots more to talk about. We'll also be joined by Nikhil Ranka of Nuvama Asset Management, get some perspective on the long-short strategies that he manages. Welcome back. It's time to say hello to our next guest on the show. We have Nikhil Ranka, CIO Equity Alternatives at Nuvama Asset Management, joining in. Nikhil, good to have you on the show. Welcome to Closing Bell. So we were just going through the kind of funds that you manage. I think the two strategies that you look at, it's a mix of long, short, and I think you also look at some technical indicators and positions and, of course, fundamentals as well. So just tell us, what's the market call as you see things right now?
So good afternoon, Surbi and Nigel, and thanks for having me on the show. So as you said, we have our flagship fund Edge, which is a long short fund, and we also have our absolute return strategy. Now coming to the market outlook, if you look at the longer term valuations at where markets have traded, broadly the median multiple is closer to 19.5 times 1 year forward earnings. Today, as we stand, if you look at the Nifty EPS, consensus Nifty EPS for FY25, we are somewhere closer to 1130. And for FY26, we are closer to 1260 rupees of earnings estimate. Now, if I put a 20 times multiple to that 1260 rupees of EPS, then we get a fair value of Nifty closer to 25,200, which is not very far away from here on. And typically what we have seen is we get a multiple re-rating cycle when we see earnings upgrade. If you see the Q1 earnings that we just finished for FY25, on an ex-OMC basis, we have seen high single-digit growth on Nifty earnings. And if you take OMCs as well, we are sub 5% in terms of earnings growth for this quarter. So my sense is the base case is that we will have some sort of time consolidation in the near term. However, 6-9 months down the line, when we roll over to FY27 earnings, we will probably be looking at closer to 1,400 rupees of EPS for FY27. And then using the same valuation framework of 20 times, we could then be staring at a Nifty target of closer to 28,000. So if we get a decent dip of 4-5% on the markets, then one should look to add back positions in markets.
All right. Hi, Nikhil. Good afternoon and good to have you on the show. Nikhil, the markets today are reminding you of Mike Tyson in its prime, right? You throw at anything and it's punching it out. Whether you talk about a war, you talk about weak data, you talk about good data, you throw anything at it and it's knocking it back out. So we've got the upside targets. Near term, 25,200. Maybe in the longer term, we head towards 28,000 odd. What's the downside risk, though? What's the, you said maybe you could, look to add if you get a 4-5% correction. But at the extreme end, what should the downside look like? That's the worry, right? So I wanted to ask you your view.
Correct. So typically, Nigel, negatives which are known to the markets will not lead to a major fall in markets. So be it the Middle East crisis, we've seen crude flaring up because of that, but this is something which is well known to the markets. If there's some sort of political instability that comes through, if we see BJP losing their grip in the state elections, then that's some sort of worry, because markets will then start building that there could be some populism that can come through, and that could lead to a 4-5% correction in the markets. But if you look at the cash levels with mutual funds and the liquidity that is flashing around, I think unless there is something which markets cannot see today, it is unlikely that we will have more than a 4-5% correction in the markets. And if we get to that 4-5% correction mark, we get to 24,000 levels, then as I said, from a 12 to 15 month horizon, you are looking at a levels closer to 28,000, which would mean that you will still make 15-17% in the markets. And my sense is everybody will start to get their dry powder deployed if we get that 4-5% dip in the markets.
Nikhil, let's go with the key overweights on the long side. What are the major positions that you have, and what do you like at the moment?
So in terms of overweight, if you look at it, banking and OMCs are the two sectors that we are positive on. So firstly, if you look at banking, some of the large cap banking names, if you look at it 2-3 years back, they were trading at closer to 3-3.5 times 1 year forward price to book. Today, if you look at that sector, valuations have compressed to probably 1.8 to 2 times FY26 price to book. And these are still making 15% ROE profile. So the base case is that even if multiples do not re-rate from here, you will at least compound at the book value. And therefore, if 15% is what the book will compound at, one can look to make at least 15% from the large cap banking names. If you look at some of the larger PSU names on the banking side and you strip off the value of subsidiaries at closer to 240 rupees and you take standalone book FY26 book at close to 560 rupees, then probably, it becomes more closer to one-time price to book for a 15% ROE profile. And we feel from here on, the downside will be very limited in those names. The street is obviously concerned about the NIM compression that will come through once we have the rate cut cycle coming up. Because if you look for most of the banks, almost 40% of the book is linked to repo rates. So when the first rate cut happens, banks will have to pass on the lending rate cut immediately. But given the challenges on deposit mobilization, the fall in deposit rates will happen with a lag. So you could have 4 or 5 bips of NIM compression that can come through. And we've also seen some sort of credit cost inching up on the retail side. Having said that, my sense is valuations are factoring most of the negatives for banking names. And these are good levels to enter into banking with a medium-term horizon. Second, if you look at OMCs, you have two components of earnings for OMCs. One is on the refining side and one is on the marketing side. Refining, undoubtedly, we've seen some cool off. Indian refining margins have come closer to $5.5, $6 per barrel. But if you look at, 2-3 days back, the marketing margins on petrol, they were closer to 8 rupees. On diesel, they were closer to 7 rupees. And our view is, notwithstanding the near-term volatility in crude prices, if you look at the spare capacity that is available with OPEC is today at a production of close to 27 million barrels, and they have close to 6.5 million barrels as the spare capacity which they can raise output if there is some supply disruption that happens in the near term. Iran total production is close to 3.3 million barrels. So even if there is some sort of geopolitical tension that spikes up, my sense is the up move in crude oil prices will be pretty short-lived. And those corrections can actually give very good entry points for some of the OMC's names.
Okay, all right. Nikhil, all that glitters is not steel. I believe that's the mantra. We have been talking about how these metal stocks are doing well. You wouldn't be allocating out there. But what if someone has it? Will you be advising them that maybe gradually book out some of these positions on these bounces?
So Nigel, we have a cautious view on steel actually. So 2-3 factors for our cautious view. Firstly, if you look at our FY24 consumption of steel, we were closer to 135 million tons. Now, in the next 6-8 months, as a whole, the industry is likely to add closer to 25 million tons of steel capacity. All the major guys are adding 4-5 million tons individually, be it JSW Steel, Arcelor, Tata's Kalinganagar project, even NMDC Steel will ramp up to its full 3 million ton capacity. And we've seen historically that demand growth has been in the high single-digit number. So once all this capacity comes up, it's likely to put some pressure on the utilization rates for most of the large guys. Secondly, if you look at the pricing dynamics, today the domestic prices are at a 4,000 rupees premium to what the importer parity pricing works to. So even if there is some sort of uptick in the international steel markets, my sense is our prices will move up with a lag. The third point is, if you look at the recent Supreme Court ruling, they have allowed states to levy taxes retrospectively on the minerals. And say, therefore, you will see that, whenever states are short on some sort of budget, they can increase the royalty on minerals, and that will create another headwind. And finally, if you look at it post 2020, some of the captive mines which were allocated to large cap steel guys, there they will come up for rebidding. You will have to bid at some sort of royalty to the Indian Bureau of Mine Prices. So a combination of all these factors makes us feel that probably profitability will get capped for steel names, and they are still trading at closer to 7 times FY26 EV EBITDA. So the risks on the steel seem to be more on the downside for us rather than on the upside. So we are underweight on that sector.
Okay, underweight on steel. So just to round that off, are you running shorts? I mean, is that one sector where your maximum shorts would be? We discussed the long. So on the short side, is it metal? Is it something else? Just very quickly, just the sector, so we know the strategy and the portfolio mix.
So broadly, I would say our major hedges are through indices should be so because that's more representative of the overall portfolio that we run. So there can be some short position here or there, but broadly, I would say whatever exposures that we have to manage in terms of our net deltas, that we typically do through indices, Nifty and Bank.
Okay. Got it, got it. So the shorts and the hedging there managed more through the indices than rather stocks or sectors. Got it. Thank you very much, Nikhil. Good to have you on the show today. Appreciate you taking out the time and being with us. All right, let's move on now to a big CNBC-TV18 exclusive in a conversation with us. Rajiv Bajaj, the CEO of two-wheeler giant Bajaj Auto, shared the company's goal of surpassing 100,000 clean energy vehicle sales. That's, unit sales per month. So the run rate is going to cross in excess of 1 lakh in the coming months. That's what Mr. Bajaj said. Of course, he was in conversation with Parikshit, and a whole host of very interesting takeaways came up. We actually have Parikshit joining in. Parikshit, there was so much that you discussed with Mr. Bajaj. So let's go through one by one some of the main highlights as this stood out for you.
One thing that really stands out is that clean energy technologies will be the big focus of Bajaj Auto into the next decade. Yes, they are soon going to reach the milestone of 100,000 clean energy vehicles, including CNG, CNG three-wheelers, electric, and also maybe an ethanol motorcycle very soon. He also told us that the next 100,000 clean energy vehicles would come in a shorter span of time, that is in the next 2 years or so. Some of the big announcements, that 25% of Bajaj Auto's revenues are already coming from clean energy vehicles, and they could end FY25 on a higher note. They are delivering around 9,000 Freedom 125 CNG bikes this month. Next month, the capacity and the company is also hoping to sell 20,000 CNG bikes by September, and this number could go up to 40,000 by January. So they're targeting a big segment, that is the 100 to 125cc segment, and they want to increase their market share by at least 5% over there. As we said, an ethanol motorcycle and an ethanol three-wheeler will be showcased by Bajaj Auto next month during the SIAM convention, and probably sometime early next year, they could launch that ethanol motorcycle and ethanol three-wheeler as well. On the EV front, when many companies are struggling with profitability, Bajaj Auto says they have already become profitable with their entire EV portfolio. They also have a completely new Chetak platform being launched very soon. They have a 36% market share in electric three-wheelers. This is a space they would like to expand and become a market leader in and have a 80% market share. Rajiv Bajaj also told us that a CNG motorcycle, a second CNG motorcycle is coming soon from Bajaj Auto, and batting for a reduction of GST on CNG two-wheelers. He said government must consider GST reduction on CNG two-wheelers because we have to follow a two-pronged strategy towards energy transition and make sure that by 2030, majority of India's two-wheelers move to either EVs or CNG. And he hopes the government is looking at his recommendations favorably. On the possibility of more partnerships, he said that the company is considering and working on a very strong and meaningful partnership with an international company, but more on that later. And in the end, ever since their 17th AGM, where he said in lighter vein that probably it's time for Bajaj Auto to have a new MD, there has been a bit of speculation about his succession plans. But on CNBC-TV18, he clarified and said he has no plans to go anywhere and no plans to retire either.
As we head into the festive season, in the months of September, October, November, we are very likely to cross a monthly sales production and sales rate of over 100,000 clean energy two-wheelers and three-wheelers. But I would hazard that definitely over 25% of our current revenue is already coming from or about to come from clean energy vehicles, which is quite remarkable. See that Chetak is now close to about 18% market share or just above 18% market share. We are neck to neck with our able competitor TVS and their iQube. I think just a few hundred vehicles separate us. Having just launched a third product, there are more due later this year, within this financial year. We talked about it the last time we met a couple of months back. And I think post the festive season, and before March, certainly there will be more Chetaks in the marketplace. And I could reiterate what I shared with you the last time, that not only will there be more Chetaks in the market off the current platform, hopefully very sharply positioned, but there will also be a new Chetak platform.
Well, Rajiv is smashing it as always. Interesting conversation that he had with Parikshit earlier today. For the time being, we'll slip into a short break. You come back, we'll get you some trading ideas. A technical expert will be back with us. Welcome back. Markets holding steady above that 25,000 odd mark. We're not getting that final dash that some would have expected, but there are stocks moving around. Tata Elxsi, that's taken off, now up close to around 7%, so big up move is what we are seeing. The dip that we saw in IndiGlobe Aviation, that got bought into, so that stock as well has done quite well. On the flip side, you have a few stocks that have moved lower. Strides has seen profit taken from the high of the day, so pull that one up. And Syngene as well is a little bit lower as we speak. Ashish Kayal is back with us. Ashish, tell us what's the call you have for us at around 3:15 for a buy or a sell call for a reverse trade in the next few days?
Hi, if you look at the entire space is buzzing, and I do not have the guts to go short on the market when we can see that there are many stocks that are buzzing around, and yes, on the upside. So the first buy call is going to be Poly Medicure. We can clearly see a very strong rise in the stock from past few days, and even today there is a strong attempt on the upside. We can expect the stock to reach towards the level of around 2,500 or possibly higher from there. And on the downside, one can maintain a stop loss of around 2230 levels. The next stock on the buy side is going to be Minda Corp. We can see a huge run up that happened yesterday, consolidation today, but I think the entire technology space is going to buzz around, and we can expect Minda Corp to reach towards the level of 700 on the upside. One can create long positions on any dips here, and on the downside, maintain a stop loss of around 580 levels.
Got it. Okay. All right. We've got that. Ashish, thanks a lot for joining in and giving us that call. Well, I think we have Gurmeet Chadda as well, who's joining in. Before that, actually, let's get in Vivek. He's been updating us about those possible changes that could have taken place in Nifty, and that's been officially announced. Vivek joins us to help us out with a quick revision of that. Vivek?
Well, that's right. All through Friday, we had told you about how the NSE Index Subcommittee would be meeting, and, they would most likely be going ahead and announcing changes of the constituents of the various NSE indices along expected lines. They've announced a whole raft of changes. The ones that we're highlighting are the ones where you will see some passive index fund impact. And on the back of that, the first index that we're looking at, of course, is the Nifty 50. Nifty 50 will see two new inclusions come September 27th. We'll see Bharat Electronics and Trent be a part of the Nifty 50, and Divi's Lab and Mindtree will be exiting the Nifty. Bharat Electronics, on the back of that, expect to see inflows of over $460 million. Trent expect to see inflows of over $640 million. On the other hand, Divi's Lab as well as LTI Mindtree will see outflows of over $260 and $220 million respectively. Nifty Bank, Canara Bank comes in at the expense of Bandhan Bank. Canara Bank will see inflows of a little close to $80 million. Now, talking about FTSE semi-annual review changes, again, Friday evening, FTSE went ahead and announced a whole host of additions, as far as the Indian market was concerned. Now, this is for the FTSE All Cap as well as the All World Index. The index that we generally track is the All World Index, given the fact that it is the one that generally sees a higher tracking position. Rebalancing on the back of all of these changes will lead to net inflows for India of close to $1 billion, and the adjustments will take place on September 20th, 2024. Whole host of changes as far as the All World Index is concerned. 13 additions, no deletions. Amongst the top names, Bank of Maharashtra, Central Bank of India, Escorts Kubota. 2 new additions, into that particular index itself, GTND as well as Hitachi Energy India. Now, when you're talking about the All Cap Index, they've gone ahead and announced 48 additions. There are no deletions over here as well. So almost $1 billion of inflows on the back of the FTSE, announcement that came in post-market hours on Friday.
Okay, all right, got that. Thank you very much for that, Vivek, for all the movers and shakers. By the way, look what's happened to the mid-cap market. Remember, when we started the show, I was talking about index-level underperformance. That's been completely corrected because now the mid-cap index, look at the surge on that index, and that's something you can't ignore. And a lot of newer names are joining the party. Case in point would be Tata Elxsi. Look at a 9% up move right now on Tata Elxsi. PB Fintech is suddenly, flying high, 7.5% on the upside. Of course, there are the usual names that we've been discussing, like, GSPL right from the morning, Motilal Oswal, Honasa, NetWeb, there's Quest Corp, which is up 6-7%, Quick Heal 14%. So massive moves coming through on many of these stocks. So it seems mid caps and small caps are saying that why should we be a step behind? We want to tango in tandem with the large caps today.
They're jiving, doing the salsa, as we speak, because it's a big catch-up that's taking place. Let's talk about one such stock, Bansal Wires. Investec, well, they have initiated coverage buy rating, target price of around 440 rupees. This is one of the new listings, by the way. A few factors that they have pointed out. One is that the company has created a niche for itself on the commoditized steel, stainless steel wire market as well. And they're also offering wide range of products, and they have diversified their customer as well as their industry base, which they believe is good news. Now, they've undertaken 2 initiatives, and that both those initiatives are sharply profitable. The 2 initiatives are they are foraying into steel cords as well as backward integration and stainless steel rods. So Investec likes that. In terms of profitability, they are factoring in 40% CAGR on the EBITDA front over the next 3 years, and they're saying that the post-tax ROCE will be in high teens, which they like. Valuations as well, they believe, is undemanding at around 24 times its forward earnings. If they're looking at FY26, then it's 24 times. If you're looking at FY27, it's at around 17 times. Put all this together, Investec likes it, and the market as well likes what they had to say. That's why the stock is up close to around 5% as we speak. Gurmeet Chadda is with us to help us with some fundamental analysis. Hi, Gurmeet. Good afternoon. Good to speak to you after a while. What's the view? Bansal Wires, do you all have a view out here? Anything you like from this space?
No, we do not have Bansal Wires in the portfolio. We have KEI Industries and Polycab, not exactly correlated, but Polycab we've been holding for quite long. We continue to gain market share. There was a bit of a hiccup due to the tax-related news. So it's a good play on housing. Second, it's a larger play on infrastructure and capex revival. While the valuations do look stretched, but if they can continue to gain market share and probably grow at 20-25%, they can probably justify that. And we have in some portfolios, KI Industries in a non-discretionary portfolio.
Okay. Gurmeet, hi, great to have you on. I mean, I don't know what to make of it. Just sudden trading flare in so many mid-caps. We were just discussing this right now, including names like Tata Elxsi. Now, this is not a very small stock. It's a well-owned name. 10% up on Tata Elxsi now. Any thoughts here?
See, it's been underperforming, Surbhi, for a while. If you see, it used to be 10,000, 11,000 plus. And, I'm not comparing it with KPIT, but, similar play, more on auto and aerospace. Tata Elxsi is more towards JLR, and KPIT is more to CASE, which is connected, autonomous shared electric, and with, top 15 out of 20 auto labels in the world. The only thing is you've got to be a little, careful in this mid-cap rally. So if you see the BSE 500 results, which have gone by, almost, the result season was hardly 4-5% earning growth. About 300 stocks are at 45-50 times earnings out of BSE 500. And I don't think so a large of them can repeat 20-30% earning performance. So it could be a bit of a catch-up the way other, mid-cap IT stocks have rallied. Mind you, I have nothing against Tata Elxsi. It's a great company, great skill sets they have. It's just that the valuation-wise on mid-cap, especially mid-cap IT, you've got to be a little careful. You can't be paying 50-60 times earnings, in an environment like this when US is actually thinking of cutting rates.
Fair enough. So we need to tread with caution. Take that point. Stay on. Gurmeet, we have lots of questions for you, but we do need to take a very quick break. We'll take that break, come back on the other side with, of course, some of the key movers and shakers this hour. Welcome back. You're with us on Closing Bell. Let's get you some more market opinion. We caught up with Gautam Trivedi of Nepean Capital earlier in the day. We spoke to him about the current market situation, the way fundamentals are shaping up, valuations, and of course, some of the concerns emanating from geopolitics. Take a look at what he had to say.
It's 41 consecutive months of net inflows coming into the market. If you look at the additions, last month alone, we added 2.3 million new registered investors. And that takes the absolute number to beyond 100 million. The reality is, if I were to generalize, the market is invariably still very expensive. And, whether you look at cement, whether you look at auto, whether you look at the metal space, everything's expensive. So it's very hard to actually generalize with respect to sectors. But if you dig deeper and find individual stocks that have been beaten up, now they could be beaten up for a variety of reasons. But like I said, if there's a turnaround happening in a specific sector or a stock, I think that's the time to focus on. We still like Zomato a lot, and I think the fact is Blinkit is starting to outshine the core Zomato food delivery business. So quick commerce has taken off in a major way, and I think with a 45% market share, we're banking on Zomato as a way to play the quick commerce space. So the new age tech companies, and I think they've come a full circle in terms of now being appreciated as companies that will create huge wealth over the next 5 to 10 years.
Okay, all right. Well, just take a note of this company, Aarti Drugs. They have announced a buyback. Just to give you a few details, the reason that the stock is surging is because the street has only taken note of the buyback price, which is 900 rupees. But it's a very, very small buyback. So just want to alert our viewers, the stock is up 10%, but the buyback is only around 59 crores. The market capitalization is 57 crores. So ideally, the stock shouldn't be running away. On fundamentals, 10% up on such a small buyback, it's extremely small, only around 59 crores odd. Gurmeet, the comment on this one. Aarti Drugs, do you all track it? Any view out there? It's up 10% when the buyback size is extremely measly.
Did they miss a couple of zeros, maybe in the print, in the release? I don't know.
Bull market.
57 crores buyback, right?
Yeah,
okay.
59. Gurmeet, your view?
Classic bull market, Nigel. And, the pharma in general, I think one big trigger could be post-US elections. You're just talking about a biosecure law, which means they want to only secure raw materials, APIs, and contract research only from non-adversary nations, which basically excludes China, Russia. Now, that could be a huge opportunity for a lot of API names in both formulations as well as molecules, as well as, in CDMO names, also in general generics. So I think that's something we'll closely follow. For now, I think we're right now focused on branded pharma, especially like, Mankind pharma. Post the acquisition, there was some correction in the stock. We have a few CDMO names. One of them is done very well, which is Newland Labs. The other one is still flat, which is Lotus. And now also looking at selectively at diagnostic space as well. So we are confined to these 4 or 5 names for now.
Okay, got that. Gurmeet, what about some of these other movers and shakers, especially in the RP Sanjeev Goenka group, right? It started with Philips Carbon Black, and then last I saw Saregama was up, and then there's RPSG Ventures. Not sure what's really going on here. Have you had the time to apply your thought to it? Any views?
Not really. I think would be a bit of a catch-up. And, market prices, if the entire group is moving, I think there could be some corporate action. I don't want to speculate here, but there could be some corporate action. We did have Saregama at some point of time in our portfolio during the COVID period. But, the entire hypothesis there was, the online content and music streaming will continue to go up. That got challenged when markets started reopening up and we exited Saregama. Other than that, we do not have any exposure to the RPGP.
Okay, so leave us with the one interesting stock on your radar. It's a big day for mid caps today. Has been lots of flair in the market. What's interesting you of late?
So one space we got lucky was the recycling space. So we got into Ganesha Ecosphere very early. We had Gravita. So we're very keen on playing this theme. The other one which is catching our attention is now some IC engine auto ancillaries who are now transitioning to the EV play or green energy play. One of them is Precision Camshaft, market leader, 60-70% market share in camshafts. Now they are getting into the electric powertrain in terms of converting the old vehicles into EV. So it is called retrofitting. They have a subsidiary called EMOS based out of Netherlands. Currently, they are doing about 10 per day. And if there's more demand, that can be they can increase the capacity. M&M used to make their own camshaft. They've started also coming to them. So the core business does very well. And retrofitting can have savings of 4-5 lakhs. You can actually convert 4-5-year-old vehicle sub 4 ton on commercial vehicles to this. Right. So that's an interesting play we are looking at.
Interesting one. Got that. The bell's going to go any second now, Gurmeet. Thank you very much. But we'll talk to you on the other side. Let's just get through the recap of what's been a good day for the market. 25,000 on the board as we are counting down to the close. Some of the big gainers today included stocks from the IT space and the metals and the commodities space. So HCL Tech is leading away with an over 4% up move. Hindalco is a close second with a 3.9% up move. NTPC, ONGC, these are some of the PSUs that have had a good run today. Then you have, of course, Tech Mahindra, LTI Mindtree, Wipro, these names from the IT side. And, of course, names like HDFC Bank, L&T, they supported the bulls with gains coming through. Actually, the Nifty tally is looking pretty good, barring a couple of names. Like Apollo Hospitals, there was a brokerage note which was not very favorable for Apollo today, so there was some profit taking. Hero Moto on the lower side. Grasim and Aisha Motors were some other stocks which were down 0.5%. But other than that, the Nifty was okay. Not too much lost. And by the end of it, Nigel, even mid-caps playing a very smart catch-up.
Well, that's right. Should be just a quick couple of points. There could be possible F&O stocks that are in the band that come out. Hindustan Copper, Granules, as well as GNFC and Nalco. I'm going to keep an eye out on all these stocks. The list will come out later today. So we'll keep an eye out on these: Hindalco, Granules, GNFC, as well as Nalco. And there could be a few stocks that will come back into the F&O band, which include Bandhan as well as PEL. So we'll keep an eye out on those stocks as well. For the time being, we'll wrap up on this edition of Closing Bell. You don't go anywhere. We come back. Markets Forward is waiting for you.